Time now for the markets with Leighton. And Leighton, you say catfish prices slipped almost a penny from the previous month?
That's right, Artis, but the pond bank price is still above year-ago levels. We'll have that story coming up momentarily. Also ahead here in the market, speculators may have pushed feeder cattle prices further than they needed to go. Cotton's price slump goes lower as U.S. wheat struggles to be competitive on the world market. Sales of processed catfish are up according to the monthly snapshot of the aquaculture industry. In December 2014, producers in the U.S. received a pond bank price of $1.15 per pound on average. Now that's for premium size live fish. That is 5 cents above the December 13 price. Farm sales total just a touch over 25 million pounds round weight, a drop of 6% from a year ago. Meanwhile, processor sales were up from December 2013, running about 3% above the year-ago figure. A lot of technical selling has left the cattle sector with mixed prices as we record this edition of Farm Week. In feeder cattle, the question of whether the future is down or up is a valid one. Analyst Ted Seifert says having too many speculators in this market may have pushed things too far.
With the big run-up that we had in feeder cattle, that drew the attention of a lot of speculators. And when you get these speculators running into the market, a lot of times that will create a bubble, so to speak, and push the market maybe further than it needs to go. The other problem with that, though, is when all these speculators have their positions and they're all really long in the market, if you give them a reason to get out and they all go running for the doors, we can really drop a lot further and faster than what we may have needed to. And I think that is really the case in the feeder cattle market. Really, until we get back to a normal mix of hedgers, commercials, and speculators, you could continue to see this sort of disjuncture for the time being. And the technicals in the feeder cattle market, when we gapped lower 3 or 4 days in a row until we expanded the limits, we left these big holes in the chart. We went up and filled all those gaps, except for the top gap, we missed by 4 ticks. That's a really negative technical signal, and we've been coming back down since then. So that negative technical outlook is getting your speculators to sell. But once we flush that out and once we get back to a normal mix, I think you can find some more strength.
Well, it was triple-digit losses for hog futures by the market close on Tuesday of this week. Falling hard is how analyst Elaine Cubb describes it. She says there's reason to be bearish on the pork sector these days.
We have seen hog exports been falling since spring, so there are bearish headwinds for the hog market. There's been a lot of speculative short selling coming on in recent weeks. So yeah, there's been nothing yet that's really, even this idea of a third strain of PED virus, not even that created a bullish spark for hogs. So they're just sort of trading down here at these levels.
The trivia quiz is about catfish this week. Here's the question for you. Which type of catfish product generates the most sales for the aquaculture industry? Is the answer A, frozen fish, or B, fresh fish? I'll have the answer at the end of the markets. The cotton market was grinding to new lows this week as we produce this segment. The big and increasing supply of fiber is troubling traders. There's also concern about the global economic outlook, especially for China. Analyst Lewis Rose says this week will likely feature strong export sales. He encourages producers to be ready to either sell rallies or hedge some cotton using well-placed puts. Meanwhile, extension economist O.A. Cleveland of Mississippi State says of the cotton market, quote, "The bear continues to slash out with his razor-sharp claws." In the wheat pit now, March Chicago was 5 cents higher late Wednesday morning, propped up in part by corn prices, according to traders. Wheat remains under pressure as exports continue to fall short. Extension economist Brian Williams talked to me about the recent USDA report on this grain, as well as other factors at play. Brian, what's the bottom line as far as wheat from the most recent supply-demand report?
We had higher ending stocks on both the global and the U.S. levels. U.S. ending stocks were revised up about 33 million bushels, with a lot of that coming from lower feed use. And then global ending stocks were revised up by 1.1 million metric tons, and most of that's because of an increase in production numbers.
Really no surprise in those figures.
No big surprises.
Now, I understand that as far as exports out of Russia, they were lowered, but increased exports coming out of Ukraine. Is this whole Black Sea region, is the wheat market still focusing on that, or is that kind of backed off in important?
Right. Yeah, they did change those numbers around a little bit, but the tensions in the region seem to have kind of cooled off a little bit. And so rather than looking at the political pressures from the area, now the markets have kind of shifted towards the weather in the area.
Mm-hmm. All right, winter wheat projections in the U.S., what's the latest on that?
Well, there are some big surprises there. Looking at the U.S. numbers, we've got 5% fewer acres than we had a year ago, with U.S. acres about 40.45 million acres planted this last fall. That's about 500,000 acres lower than even the lowest pre-report expectation. And then Mississippi's got quite a few fewer acres as well, with 150,000 acres planted.
Now, of course, the stronger dollar seems to have been play in not only wheat, but a lot of markets, but it seems like wheat takes it more on the chin when the dollar is strong than maybe corn or soybeans.
It has, and that's hurt our exports. Exports stayed the same in the last USDA World Ag Supply and Demand estimate, but the number was already fairly low. And so with the strong dollar and then the economy struggling in Europe, that's really kind of hurting the wheat markets.
And I know as far as Chicago futures, they seem to struggle more than Minneapolis and Kansas City. Why
Right.
that difference?
Well, the big difference is that there's different types of wheat traded in each market. Chicago is the one Mississippi's interested in with soft red, but Kansas City deals with hard red winter wheat, and Minneapolis deals with spring wheat.
Before our feature story, let's check the trivia answer for this week. And the correct choice is A. Frozen fish is the top seller. It in fact accounted for 61% of catfish sales in December.